Welcome, everyone, to a session with three of the leading CEOs of social investing in the world. I'm Max Rothery, Finimize's VP of Community, and welcome back to this next panel session that I am personally super excited about, not just as a community builder, but someone who really believes in the power of social when it comes to investing. I'm joined by Public CEO Leif, Finimize CEO Max, and eToro CEO Yoni. Just some housekeeping before we jump straight into the questions. If you haven't already, please introduce yourself into the chat box with your name, where you're tuning in from, and answer the poll that you're going to see on your screen now. This is just going to be a 30-minute discussion. At Finimize, like to keep things brief, so we'll have 15 minutes of a conversation between us four, and then 15 minutes of Q&A. So don't forget to ask your questions throughout this discussion in the Q&A box. Upvote the ones that are most interesting, and I'll make sure that these guys are put on the spot in the final 15 minutes. Right, let's dive in. Guys, how are we doing? All good?
Amazing.
Great.
Awesome. Look at everyone tuning in from all over the world. Okay, community, I'm just going to kick things off. All of you lead large social investing companies. You've seen the change from the highs of a bull market to the lows of the current bear market, with potentially worse to come. First off, can you each give insight into how these investors are behaving on your platform and how that differs in this new environment? Leif, you go first.
Cool, sure. So generally speaking, what we're seeing is that people are still investing, right? So we see what we call in our industry like net inflows versus outflows. So more people putting money in and taking money out. And so people are still net investing. I think generally speaking, this has been a moment of a lot of learnings for people, and that people are generally kind of like changing their behavior to a certain extent. And so you see some of the speculative behavior that maybe was fairly normal in 2021 to, be less widely distributed now today. And so you'll see that in things like crypto volumes, for example, being more down. But on the other end, you'll see, for example, inflows and things like, treasury ETFs and so on to be way up, right? And so you kind of see how people are kind of trading behavior in terms of less speculation to more proper long-term investing. And so on. And so we did this little survey earlier this year, and some of the numbers of that was that basically a little over half of people are looking more at fundamentals now, and that's literally what we're seeing in the in their behavior as well, in terms of what they're choosing to invest into, and so on. And so that's roughly it.
Yoni, how about you on your platform? That sounds similar to the conversation we were having a couple of weeks ago, right?
Yeah, I mean, we've seen, two amazing years of bull markets, both in the stock markets as well as in the crypto markets. And I know for us, everybody was sort of complaining externally that, it's easy to be a retail investor because everything just goes up. So I think this is a year of education. I think what we're seeing is users, and investors realizing that it's not that easy to actually make money investing, and that they need to educate themselves more. We see actually more social interaction. We see more engagement with feed posts and sharing of information. We see a lot of deep diving towards specific sectors. We have the Value Investor Club, which we're very much, we told you so this year. So all of our popular investors who are focused on value investing are a bit too much gloating towards the more tech and growth investors or the crypto investors. I think some segments we've seen more hodl mode. So crypto is hodl mode. We see the number of units actually increasing. So people are actually holding more Bitcoin and more Ethereum right now than they did at the beginning of the year from a unit account. Obviously, dollar value is lower, but total amount of units is actually higher. And, we've seen a lot of surprises of popular investors on our platform, the ones who are being copied by hundreds of thousands of others that have been very successful actually in commodities and energy trading. I think that was a trend that really shifted this year, obviously with unfortunate events in Europe and the war in Ukraine. But we've seen sort of the shift from renewable energy and green last year to now a lot of people who sort of got back in time into both commodities trading as well as the energy sector, which was actually high this year.
Max, just wrap this up for us. So we've heard, less speculation. It's a time for learning. It doesn't seem to be capitulation. From a Finimize community perspective, like, what have you taken away from this year?
Yeah, it's interesting to hear both Yoni and Leif, because I think broadly that's also in line with what we've been seeing. A return to fundamentals, a return to more longer term investing as opposed to perhaps speculating on individual stocks popping the next day, etc. And I think very much to Yoni's point, education. I think what we're seeing is an evolution of a certain subpopulation, which I always think is very important to emphasize. This is a subpopulation that was all over the media last year when it came to this day trading phenomenon. And that subpopulation is very much evolving from day trading to long-term investing. I think more broadly speaking, the full population of retail investors continues to stay invested. So in a very recent survey that we did within our user base, we saw that they continue to stay invested. They perhaps are taking a little bit of risk off by investing into index funds rather than into single stocks, and very much also interested in exploring new sectors. Yoni already mentioned energy. Energy is sort of taking up more interest as opposed to, for example, tech stocks. And I think what we're seeing is this transformation of the retail investor becoming long-term investors and investors that are here to stay.
So I guess what we're kind of, the consensus here is, you'd expect for a macro cycle that's coming off the back of a 10-year bull market, you'd expect the retail investors to capitulate or to flee from the stock market. What I'm hearing from all three of you as leaders of social investing platforms is you're not seeing that behavior, which leads you in, I guess, two solutions or two reasons for that, right? Like, are we seeing like the rise of a more sophisticated investor here? Or are people now in a position where they are, I guess, panicking and don't know what to do and kind of keeping their investments as they are? You're all here part of the believing in part of the democratization of investing movement. Sorry, that's hard to say. But we all believe in democratizing investing and leveling the playing field between the everyday investor and the professional investor. What is it genuinely going to take for that to happen? Like, will retail investors on your platform ever be able to compete with the professional investors? Is that the goal that you're all aiming for? Max, I'll start with you again on that.
Well, I think that at the core of what we're doing, and we're obviously have a slightly different proposition to the other two gentlemen on this call in terms of we are information and education only. We don't allow you to actually execute a trade. And at the core of what we're trying to achieve is we believe there is a dramatic information asymmetry between the finance professionals and the end consumers, specifically the retail investors. And it is our mission and our job to eradicate this information asymmetry, which the internet is the most powerful tool to do that, to put as much information into the hands of the end consumers so that they can make smart decisions and they can pick whatever platform and platforms they wish to make that decision. But that is what we're on a mission to. And I think the more that we can have platforms like public eToro, the more we will level the playing field. Now, having said that, obviously what the challenge remains is, number one, there's still a lot of data points and information out there that's very expensive. And so that, I think, is something that we all need to work on. And number two, at the end of the day, a lot of professional investors it's not like they sit there like a retail investor and they make individual trades. They have algorithms, etc., that do that. Now, maybe with the thing that everybody's been talking about, ChatGPT-3, retail investors can figure out a way how to do that themselves. I don't know, maybe that's the future, but I do think we are leveling the playing field, but it's still not level, and we all need to do our part in leveling it.
Leif, what's your take on this, right? Like, are you seeing, from being a social first platform that you have been for years, even before Public was called Public, are you seeing this increase in sophistication of the retail investor?
Yeah, 1,000%. And I think, so we've always talked about this concept of collaboration over competition. And so like in that moment, I would even say that it's not about competing with professional investors or so on. It's more about learning from each other, right? And that learning either comes from, comes from true exchange, and that's where things like social features come in, right? Seeing what other people are doing, learning from, their past experiences, as well as going through it together. And so, and that going through it together, we believe is actually a quite powerful kind of proposition, because if you, for example, let's say like you open up the app, you see a red line pointing down to the right, and you're kind of trying to figure out like, oh my God, what should I do with this? And, panic starts to kick in. It helps a lot to have a lot of people around you that are experiencing the same thing at the same time, and being able to, exchange with them, right? And being able to, kind of talk through what's actually happening. And so that context that is being created around the markets through social, through more content education around it, and that being contextually presented to what's actually going on with a specific asset potentially, with what's actually happening with the Fed rate, et cetera, and helping people break that down, either between each other or also from, analysts, more professional investors, et cetera, and, sharing their experiences. That has been incredibly powerful, right? And so the sense of that, you open up your, whatever app you're using, but like you open it up and you recognize not alone, that is actually something that we believe has been helping a lot of people to make more informed and just like better investing decisions.
Which I guess is the real cultural shift for the finance industry, right? Like, it's putting the trust that people can think for themselves and make their own decisions with their own investments. Yoni, on your platform, you have the ability not just to see the performance of investors, but individual investors can choose who they follow based on their performance and how their portfolios are performing. As part of this democratization of retail investing, can we say that we're doing a good job here? Like, have we genuinely, moved?
I'll be bolder here and say that I think our top popular investors are actually better than professional investors. 1 out of 1,000 1 out of 1,000 retail investors on eToro. We have about 3 million funded brokerage accounts. We have about 3,000 popular investors. Those are the ones who are actually being copied by other users with real funds. So you can actually see people on eToro, see their performance and say, I want to copy someone with $5,000, automatically copy their entire portfolio into yours. And every time they trade in your account at the same time at the same price. And when we compare their performance, their average performance in 2020, 2021, and 2022, they actually beat the main indices. And again, this is 1 out of 1,000 retail investors that is good enough and consistent enough. And now a lot of them have multi-year track record, 3, 5, even 10-year track record on eToro, to see that these are people who are sort of focused on a specific industry. I would even say that in some industries, our customers who become popular investors know more than the financial analysts we speak on Wall Street. So when you speak to financial analysts from a bank on Wall Street, they know how to read the financial reports of a company. They don't necessarily really understand the business of the company, the product of that company. When you speak to the passionate popular investors in eToro, in a lot of cases, they're really focused. These are doctors that are actually investing in biotech and pharma companies. These are financial analysts who work in a big four and invest in financial services companies. So their expertise comes from their passion, not from their work. And I think in a lot of cases that actually means they have better information in some cases than professional investors. I agree, we all have a role to continue and democratize information and access to information into the markets, so we really level the playing field for everyone. But I think today, with a mass amount of information on the internet, retail investors could definitely look at this as a level playing field, already constantly progressing in their favor.
What
I would totally double down on that. That I think it's a big misconception that retail investors are like the dumb money. and that there's incredible sophistication out there that happens in retail.
And we see that all the time, right? Like that's the narrative that all of our businesses are here to shift. And the power of seeing a community or having a community first product is that we see it firsthand. Increasing sophistication, really smart individuals making educated and informed decisions. And also leads us down this bias route, right? Like just like professional investors, you invest in what you know. And if you're a doctor and you're investing in health tech, fantastic. But how do you tap into the wider crowd wisdom to help you expand and differentiate? If I was to take all of our discussions here, and I'm on the same page as all three of you, everything sounds pretty positive. Retail investors are still investing. They've got more access to technology on eToro. They're even performing better than the professionals. Let's bring it back to what are retail investors looking for going over the next 12 months, and what advice can we give them that's going to help them practically get through what's going to be a very complex environment? A lot of people, just like some of the super high growth portfolios, will be sitting on 40, 50, 60% losses right now. In your opinion, what should those people be doing when they're looking at their portfolios and their net worth over the next 12 months, and beyond? Yoni, I'm going to come back and start with you on that.
So as I said, I think this is a year of education in financial markets. We are big advocates of constant learning, and whether it's learning from each other, which is really the aspect of social platforms like everybody here, or whether it's the fact, I don't know if it's because Musk bought Twitter, but for some reason my entire Twitter feed is now quotes and books and finance. And this is a real great opportunity to read smart investors and what they wrote over the past 50 years. If we thought like every cycle, but this cycle is different, it seems suddenly that, it rhymes with the past. And I think for a lot of our investors, this is the first economic cycle, increased Fed rates, what happens in a recession, how does money shift from one industry to another, what happens in the times of uncertainty, political uncertainty in energy markets, for example. I can say I've been humbled by this year. It's humbling experience as an investor personally, and my portfolio is public, like all of our customers as well, to realize that you don't know everything, that you need to learn more, you need to learn from others to understand who's successful in a year that's challenging as this year. And remember that these market cycles have been with us even before the markets. It's been called, I think, in the 1600s business cycles, even before exchanges were made up and started to derive stocks. This is really how the economy works, and people need to learn and understand. And the best way to do that is really educate yourselves from history and from great investors in the past. I gave my chat GPT, I gave the mission to try and TLDR to summarize some Howard Marks and Buffett investor letters.
And
Howard Marks, his view in his recent letters that retail investors have been trained to think by the dip. Thanks to the beginning of the pandemic, would have been a great strategy. 2008, great strategy. Leif, how do you think that's going to play out for retail investors? And coming back to this question of what's your advice for not just your members, but globally, retail investors all around the world, how to think about the next 12 months?
Yeah, obviously no financial advice, right? Just saying disclaimer. But so again, I think this is a big moment to really use it to educate yourself. And I think, the last 2.5 years, like 2020, 2021, have very much been outlier years. And if you started your investing, journey throughout that, then, you might have had a little bit of like distorted, learnings throughout that time. And I think what's happening now is that you recognize markets are coming back to really value them, like to really value in fundamentals. And that will really, kind of show suddenly which companies, are truly being valued by the markets and which maybe not. And where, in the past, you might have had just very generalized categories, suddenly create correlations between certain companies and so on, like it's all software, so it goes up to the right, things like that. that it's just not going to happen, likely anytime soon now. And so right now, I think it's actually a very good time to truly, double click and try to understand why is a certain company performing better than another one, and to really learn these all these like fundamental differences, to then apply that, moving forward into your like people's investment journeys.
Max, I'm just going to extend the same question to you. How would you urge the Finimize community and the wider global retail investors start approaching this complex economic environment?
So I think there's a fantastic video on YouTube actually from Ray Dalio, where he explains the economic cycles. And I would probably urge everybody to rewatch that again, because now we understand what he was actually talking about in the video. And so if you take that and zoom out, you have to, first of all, I think it takes out a little bit of the panic. This is part of the way that the economic system works, and this will happen. This has happened, and this will for sure happen again. So point number one. Point number two is, and I interviewed Sally Krawcheck this morning, who used to run Citi Wealth, Bank of America, Merrill Lynch Wealth, etc. So she has a long history in this space. And her point was also, at the end of the day, if you have a strategy that is long-term, these economic cycles shouldn't really bother you that much, because you're investing for the long term. Otherwise, you're trading on a daily basis. So I think that's number two. And if you do want to trade a small portion of it, it reminds me of a quote from very much in line with what Yoni was saying. I think in terms of everybody thought they were good investors, and now we can really see who is. There's the founder of Apollo Management, one of the largest funds based out of New York, Mark Rowan. He said to his fund managers, "You've been working for me for 10 years. I still don't know if you're a good investor." And I think now is the time when everybody will show, are you a good investor or not? And I think the reality is, not to overload here with references, but Warren Buffett and Charlie Munger, right? So that what they say is everybody wants to become rich, but everybody wants to become rich fast. We want to become rich slow. And I think the performance speaks for itself.
So Yoni, I caught up with Yoni a couple of weeks ago, and he casually dropped in. He went to lunch with Warren Buffett. What was this, last year?
It was just before the pandemic, February 2020.
Give us your one takeaway from that, with everyone watching here today.
I think for me, really, the aha moment with Warren Buffett, and if you read his books, sitting with him was like just, you would really hear him talking from the book, is everybody can be an investor. Investing is simple if you invest in what you understand. You invest in businesses, you understand the businesses, and you understand how to read their financial accounts, and you invest in the long-term perspective of the business. And for me, it was great because it's really everything we stand for in eToro, to empower retail investors and to learn from one another, sort of realize that this is the message from the Oracle to Omaha over a long period of his career, telling people, you need to invest in stocks because the stock markets do well. You don't need to trade frequently. You need to take a long-term horizon. And coming back from there, we started the value investing club. I was surprised that coming back from there, I talked to a lot of people in the investing industry. I've been, the founder and CEO of eToro now 16 years. And I realized how surprising it is that we forgot, like our generation a bit forgot in this 10-year bull cycle, the fundamentals and the concepts of, DCF, and how many of our investors are actually looking at, net income, cash flow from operating businesses, understanding how to do a DCF, looking at financials for not the last 2 years or 2 quarters, but 3 years and 5 years. It was super interesting to start working with our clients, our investors, to really sort of practice those skills that almost felt like people forgot and just thought PE multiples, growth multiples, CAGR, and that's it. And now we've seen sort of a reversion to the mean where all public companies now are sort of forced to think positive net income and positive cash flow, and focus their business on scaling not only growth, but growth of profits and bottom line as well.
So, I love the fact that we have three of the most innovative CEOs in investing in the world right now on the call, and everyone was referencing Ray Dalio, Charlie Munger, Warren Buffett, with the same traditional principles that have been rounding investing for hundreds of years. Yet you've all decided that social
hundreds of years would be a bit exaggerated, by the way.
They do look quite old, but I'll give you that. They're not quite that old. But my point is, like, you built very innovative businesses that do encourage daily engagement or weekly engagement with your products. So technology is the new thing here, right? Like, the fundamental principles of investing aren't changing. What you three are doing is really using the forefront of technology to empower these investors, to help them become better investors. So what's next? We've seen the friction removed, we've seen the fees removed, you've introduced social investing. I think all three doing interesting things with data. To wrap this up, where do you see your space going next for the retail investor, and specifically with how is technology going to empower them further? Leif, would love to start with you on that.
I think one thing we're seeing is getting more asset classes available to people than that have been before, right? So that falls into, we recently launched alternative assets, so like fractional art, goes into real estate, music rights, high fashion items and so on, right? But then also, going into other things like in the future, private equity and so on. And so I think there are still a lot of asset classes that are not widely available to retail investors. And we believe that the more you enable people to have access to this, the more, they have a chance to have a more holistic view on their portfolio, because they can manage it in one place. And if you can do that, you can kind of, have a better grasp, better grip on your portfolio than having it in a bunch of different places, right? Depending on what kind of asset classes you're invested in. And so bringing that together, I think is one of the next steps. I think the second thing falls really into, you had a lot of that, democratization happen in the US specifically, first. Then you had a lot of that happen in Europe specifically also, but I think you're going to see that more and more happening in other markets around the world as well. And obviously Yoni is much further on that journey, but I think generally speaking, really the sense of just, more assets available to more people, but also through more markets around the world. And by that, just like spreading that democratization even further.
Which is fascinating. The ongoing survey that we run quarterly, thousands of people responding, over a third of our community invested in alternatives this year. That is a new stat for us, and almost half plan to next year on an ongoing basis. Could be a byproduct of the macro environment, people hunting for returns, but 100% is got to be down to technology making it more available. Same question to you, Max. Like, where do you see this retail investor space go over the next year or two? What new technology is coming in for the retail investor that you're excited by?
I would definitely echo. I also think the sort of full stack, if you will, of the asset classes and democratizing that and giving people access to that is going to be a major trend. And then I think kind of coming back to what we all were talking about, this return to fundamentals and this information asymmetry. While I agree that a lot of information is available now, I still think there is a lot of work to be done in releasing information in a form that actually people can digest, can understand, and can take clear action from when it comes to doing this fundamental research. So it's one thing to understand I need to look at data. It's another thing to then understand what kind of data I need to look at. And then it's even another thing to then interpret it the right way. And I think there's still a lot of confusion and complexity in the marketplace. And I think that's something that needs to be innovated on.
So I'll chime in. I'll say it's not only the democratization of assets, it's the digitization of assets. So if we think, if we're moving from thinking about the term crypto to thinking about the term blockchain, Web3 assets, I think the future is most assets are going to become digital native. that are going to be interoperable, 24/7, transferable, and that sort of is across the board. It's super easy to innovate in place like NFTs, right? We launched the ability to buy and sell NFTs on our Delta platform, and people bought and sold apes and punks because these are new products, but obviously you should be able to also buy eventually fractional art. But at the same time, you should be able to easily buy equities in the Korean or Japanese market, or sovereign bonds of a European or a Latin American country. So I think, access has been democratized in the easiest type of assets, which is commission-free stock trading in US stocks. On eToro today, you can trade on 18 different capital markets. You can trade FX and commodities as well. But I think we are going to see that universe of assets increase to more people, to hundreds of millions of people through the digitization of assets. And I think we're going to see, and it's hard not to talk about this in a week where everybody's sending you screens of ChatGPT. I think machine learning assisted investing is something that it's hard for us to sort of rationalize and then imagine it exactly. I know we've been using a lot machine learning in eToro to try and create sort of how do you create for our portfolios a machine learning weighting algorithm to define how to put the right stocks in the right portfolio in a specific theme based on the trading activity of everybody else. But I think the advancements we're seeing in machine learning, I'd be surprised if, in 10 years, we won't see a lot of our portfolios being at least assisted, if not managed, by machine learning that could learn from a lot of people just faster.
I love it. So Finimize community, now is the time to jump into the Q&A and start upvoting the most exciting questions, and I'll put these guys on the spot. I will be fair, however, so anyone asking for predictions of asset classes and what where to invest your money next year, I'm going to be kind and put those further down the list. Yeah, I'll go straight to Yoni. But I have to say, look, thank you so much for being open and candid with us. Check out all three of these platforms. As a big, passionate proponent of the power of social investing, it's never been more exciting to be in this space. Okay, Q&A time. I'm just going to pick one person per question. This has popped off as like 50, 60 different people discussing in the chat and over 30 questions, and we've got 10 minutes. So, Leif, I'm going to start with you. Rehab asks, not everybody has an informed opinion. How do you suggest people who want to get involved in social investing cut through the noise, especially in turbulent markets? Super important when you're building a social platform. How do you make sure you're connecting people with that quality information? Great question.
So we look at all content that's being provided in these three buckets, right? There's user-generated content, social, right? People exchanging ideas and thoughts with each other. There's editorial content, which is something that we would, for example, orchestrate, right? Wouldn't be our opinion, but we bring in analysts on specific companies. We bring in public company, CEOs and so on to talk about their businesses. And then there's programmatic content, which is basically, you can think of it as like data and so on, right? So for example, one thing we're doing was scraping like public company filings to create structured data on custom company KPIs. So like see like subscriber growth of Netflix, how many cars has Tesla shipped and so on. And so like in these three buckets, right, these are three different types of content. And, you can think of it as like, one is just very factual. If you come to the data side, then in the editorial one, you kind of have access to people who are kind of like vetted specialists, so to say, within certain areas. And then in the UGC part, obviously, it is a lot about the exchange of it. And so with that, I think it falls into like, finding any information online, like you kind of have to apply an own filter of recognizing of like where that information is coming from. And especially in UGC, you have to obviously, make sure that the people you follow, are not necessarily like, pumping their last coin or so on. And so on. Then the other thing I think we're seeing is that people start their investing journey with things that they have some sort of their own domain expertise in. And that might be because you're a customer of a company for a long time. It might be because you have a certain domain expertise based on your own profession, etc. And so wherever you kind of have some expertise to begin with, that is likely for you like a more comfortable place to start in, right? But again, no financial advice, but yeah.
Fantastic, and I'm going to keep whipping through these. Maxi, we've got a question here about GameStop era, and we've all witnessed how crazy that was for certainly a couple of months. Ryan James asked, do you think that meme stocks, i.e. GameStop, will have a comeback with retail investors coming together and trying to exercise their power en masse?
Interesting question. I guess there's been a couple of resurgences, like Bed Bath & Beyond, etc. But when we looked at the data, the trading volume was significantly less than what we saw during the GameStop times. I would, I guess, be bold and try and predict the future. And nobody obviously has a glass ball, but I do think the sort of conditions for that perhaps have started to evaporate a little bit, where people had a lot of time on their hands. People were looking for stuff to, basically gamble a little bit. And I think given the paradigm shift that we have been experiencing and that we have been discussing, more towards fundamentals, etc., I think probably the appetite for this is going to be less. Having said that, I do think there is going to be some sort of outlet necessary, where if we all agree that the retail investors are going to continue to play an important role in the overall ecosystem, that there needs to be ways for them to voice their opinions and really represent and enforce their interests. I know there's a couple of innovations happening there. And so I think that will be interesting to see how that will play out.
Love it. Thank you very much, Max. Yoni, here's one for you. We've spoken about ChatGPT. The only other thing that has really dominated headlines and captured the imagination was FTX recently. How have you seen, people on your platform and I guess the wider space react since FTX's collapse? I know you mentioned Web3 and you can buy crypto via eToro. Have you seen any loss in faith? And thanks, Damandeep, for that question.
I think what a lot of the recent sort of crashes and containing in the crypto markets have showed us is the importance of things that people in finance should be very much familiar with. Is one, the importance of regulation and the importance of working with regulated companies that are large in scale. We've been regulated for the past 16 years. We're regulated in the US, in the UK, in Europe, in Australia. And regulated entities of large scale have that expertise of segregating and safekeeping customer assets. In parallel, I think this shows the importance of diversification. I'm a big believer in Bitcoin. I'm a big believer in ETH, in the crypto ecosystem, more in Bitcoin and ETH than the rest, I admit, but I have a long-term view in it, but I wouldn't go all in. And I heard a lot of people sort of pushing other people or talking about going all in crypto. I think this reminds us that to manage a portfolio, even if you're looking for a high-risk portfolio with double-digit plus returns, you need to diversify your portfolio across different asset classes, different potentially geographies, different industries, different trading strategies, maybe using copy trading. And I think when we see sort of that crush, and this is my fourth crypto winter. So I've been through the first one was, I think, 270 going down. Then the Bitcoin crash of 2014 with Mt. Gox collapsed, went from all the way from, I think it was 2,000 to 150. Then we saw Bitcoin going from $20,000 in 2017 all the way down to, I think, about $2,500. And now we've seen, Bitcoin moon to 67,000 all the way back to where it is now. I think the true believers in Bitcoin as an asset class remain believers. Probably a lot of them also understand how to keep their assets and then choose the right partners. And I think this takes us back, just like previous winters took us back. Some people lose faith and long-term believers continue to build and accumulate. And I think the lessons learned is learn to diversify. And again, the importance of, which is again, not necessarily a popular opinion in crypto, but we do consider eToro more than crypto, with the ability to invest, in stocks in parallel and other financial markets. The importance of regulation and knowing who you work with for retail investors.
Thank you so much. Leif, I'm going to pick on you for this one. You mentioned that specifically public, but you think the wider industry are going to introduce new asset classes into new territories. Georgios, one of our community members here, is asking, one of the things that remain a imbalance between institutional and retail investors is the world of accessing IPOs, potentially through fractional access. But is there anywhere on your roadmap that you've thought about giving people access to IPOs or sort of pre-IPOs? And if not, why not?
No, we have, and it's very officially on the roadmap and so on. And obviously, IPOs right now are not many of them are happening. I think, just generally speaking, to your point, there's a question of when does the journey of a company's start to when you can invest into, and it might even start in private markets before they even IPO. And so the way we look at it is like, democratizing asset classes in all regards, and that might even fall into private companies at some point as well, and giving people access to that, as well as the actual IPO moment, right, which is just one moment, and then from there on further out. It might also go the other way around, right? When companies go private, and you might have the opportunity to keep stock in it, like just happens. Those are also moments where you kind of want to have you want to offer as much optionality as possible to people in those moments. Obviously, the earlier they go, the less liquid those assets are right now, right? Private assets are still pretty fairly illiquid, and so I think one of the big challenges for companies like ourselves and Yoni and everyone else in the industry moving forward is to not just give access to these asset classes, but to also try to create very liquid markets for them. Because especially as retail investors, right, a lot of retail investors need more liquid assets because they might need quicker access to their funds and don't necessarily always have the opportunity to just sit on something for 10 years. And so, looking also not just to access, but also to just provide more liquidity, I think that is really going to be one of the larger challenges.
Awesome. Well, guys, we're coming to the end of this panel. Community members, we've had thousands of you tune in to just these first few sessions already. The team have asked, please make sure you complete the poll that's live on your screen right now. Just to summarize for everyone, okay, it's been a fantastic conversation that we've had today. Retail investors are here to stay. We're not seeing them capitulate or exit from the markets. Right now, yes, is a difficult economic time, but what a fantastic time for education, as we are breaking down the walls and have never had more access to information. Listen to some of the greats. The fundamentals of investing don't really change. And then finally, what to expect from the future of this space, and the three innovative CEOs and retail investing tech in general, is more information, more asset classes, more geographies, and more technology to help enable that going forward. I'm excited about where this is going over the next year and 10 years and beyond. For all of you tuning in, please stay tuned for the next session where we're going to start looking at where those opportunities are. So all of those questions that you wanted these guys to answer about which asset classes to invest in for success next year, we have Wei Li, the global chief investment strategist at BlackRock, diving into that for you next. Thank you, everyone. Great to be here, Finimize community, and Leif, Max, and Yoni. I'll see you soon.
Thank you very much.
Bye-bye.
See y'all.